Good morning, welcome to Business. My name is Darrell Kwao. The United Nations Economic Commission for Africa has said the importation of some exclusive products and sensitive services that some economies like Nigeria have banned will, by the 13th year of the Continental Free Trade Agreement, be completely phased out. Ahead of the implementation of this agreement, there have been concerns about the standpoint of some protective economies like those of Nigeria and South Africa, which ban importation of products and services. Now, coordinator of the African Trade Policy Center, David Luke, says the Continental Free Trade Agreement puts everyone on a level playing field. Charles Aite has more in this report.
Addressing the media, coordinator of the African Trade Policy Center, Dr. David Luke, explained that the Continental Free Trade Agreement will put everyone on a level playing field. Currently, 90% of tariffs on goods and services will be off, with the remaining 10% phasing out over the maximum period of 13 years.
This particular agreement puts everybody on a level playing field. It says that 90% of tariff lines should be liberalized, and as I've already explained, also 90% of trade. It also says that the remaining 10% will be phased out, depending on various technical criteria, over a maximum period of 13 years. So countries can now designate excluded products and sensitive products, and they have each of them. Those categories have a timeline for being phased out. But basically, by year 13, we should be at 100% and down to zero.
Meanwhile, Principal Policy Advisor for UNECA, Dr. Joseph Atamenta, has called for the need to move away from being suppliers of raw materials to suppliers of finished goods. He says in the cocoa sector, there is a need for Ghana to look at a multi-dimensional strategy, as there is a huge demand for chocolates in the African market.
Even if you look into the area of agriculture, you've got to try and see how we can move away from being suppliers of raw materials, but rather suppliers of finished goods. So therefore, in this case, we have to focus on the agro-business and try and make sure that we add value to it, because so that we can get the benefits of it. If you look within Africa, for instance, some of the Ghanaian products, chocolates, which we champion as to be the best in the world, the golden tree. Outside Ghana, when I go to, or when my travels, where it's taken me, I don't see the chocolate anywhere. So you've got to begin to see, perhaps maybe it is a targeted market it's gone to in terms of exports, but you've got to find a way to see how it can get into other markets.
With the Continental Free Trade Agreement now the world's largest free trade area since the formation of the World Trade Organization, it will cover a market of 1.2 billion people with a combined gross domestic product of $2.5 trillion across the 54 member states of the African Union that have signed up.
Now, there is optimism in the outlook for the banking sector. There is more in this report on the latest banking sector report released by the central bank.
The Bank of Ghana is basing its projection on strong pickups in deposits, the capital base of the remaining 23 banks, assets as well as their capital position. The regulator in its report, which assesses the soundness of banks in the country, also maintained that growth of credit post the recapitalization continues to pick up alongside after-tax increase in profits. The capital of banks expressed against their risk also performed way above industry standards, pointing to increased resilience to the sector following the recapitalization. So how is the Bank of Ghana working to sustain strong growth? Well, the central bank says it plans to improve financial intermediation and programs aimed at reducing the industry's stock of bad debts and also intensify credit risk management practices on the part of the banks. However, despite the strong growth of all indicators, some businesses still continue to complain about the difficulties in securing loans and even deposits as well as investments.
And that's it for business. Back to you, Bernice.
Thank you so much, Daryl. Coming up shortly here on News Desk, we've got updates from the U.S. Open. George Adojino will be joining me. Please don't go away.